Good afternoon, good morning, good evening, everyone. It is almost 7:30 p.m. Eastern Time on this Friday, the 7th of May, 2021. Hope you all have had a good week. Taking a look at Cardano. So, this is this is tough. The analysis side of this, just because it's hard to be bullish when the setup is technically bullish, but there's a lot of broader market things that are signaling towards weakness. Excuse me. So, first, let's just look at one of the things that I find a little odd as far as where we're at and why, even though I want it to go higher, I still feel like it could go lower. So, doing this over and over, I feel like doing these fib projections, but I want to make it very clear. And I wonder if I can make these. I don't think I can make these fonts any bigger, can I? No, I don't think so. That's fine, but we'll use black. Maybe that'll stick out a little bit more. So the extension from there, 2.284, is the 161.8 Fibonacci extension. That's just above where we're at. And then another extension from this swing. We don't see that. We see the 236 as an area that we've been halted against, which makes sense. But then, as we get further up here, the next confluent zone that we have from these extensions is between $5.11 and $5.27. That's the 200% extension and the 618. So there's a lot of room to run. However, this could turn into a failed fifth, an ending diagonal possibly. If we look at the 4-hour chart, there's a pattern setting up here that does not look very healthy. In fact, I think it's already showing evidence of breaking down now that I'm looking at it. So let me get rid of the Ichimoku, and let me get rid of the wicks. So clear it up a little bit. We have this W pattern in here, which is really nothing more than part of a broader wedge pattern. And this is really turning into an ending diagonal pattern, and an Elliott wave analysis, that is what kind of triggers the end of a current upswing. It's not indicative of a trend reversal. It's just showing us that there's a sign that the trend is likely reversing. And I believe if we were to measure the angles of these last upswings, we're going to see that they get smaller. So, yeah, if we take this trend line and we can identify the angle, I don't know if you can see that, but that's 86 degrees. That's 85. And then we get to 81. So when you see the angles falling like a fan or like dominoes, that's your warning sign that the move is ending. And the pattern that you usually see in this is usually a wedge, which this is. You could draw it like it's a flag pattern as well. But, it's either way you look at it. We've fallen through it already on the hourly, and now we're retesting it. This angle at least. So, yeah, there's just a lot of stuff saying, maybe we're not going to be moving up that much higher. And so where would we go to the downside? Let's take a look at that. I think I want to go to the daily chart. Didn't want to do that. In fact, here, how about this? This will make things a whole lot easier. Let's just forget the whole projecting, and let's just do it the easiest way, which is identify where the highest close has been at, the last highest close, and measure some percentage moves below, starting at 50%. Actually, I like to start at 60%. Okay. And I'm just going to kind of roughly draw these. Okay. So now let's say you've got $1,000. Then what you're going to do, okay, actually, it's not financial advice. So what I would do, if I had $1,000, this is what I would do. I don't want to buy at the top, but I also don't want to just let my capital sit there. I would put 25% of that. I put $250 with a buy limit order at 116.32. I would do another $250 with a buy limit order at 96 cents. I would do another $250 with a buy limit order at 81. And then I would do my last $250 with a buy limit order at 65. These represent the 30%, 40%, 50%, and 60% moves below the highest close. I'm going to leave those there. I'm going to reset them every week and wait for price to come down and tag them. And if it hits it, it hits it. If it doesn't, it doesn't. You could also separate this. This is part of intra-position management. It's part of institutional risk management and positional management. Then you have you could do a 20 to 25% level as well if you want to divide it into fifths. So that's there too. That would be at 132.98. So just some ideas. But yeah, there's the breakout. I mean, it still could go higher. But just looking at some overall broader weakness across the board, expecting to see some profit taking going on. There's a lot of seasonal, cyclical GAN cycles involved in here, so just pay attention to that. But that'll do for now. Thank you guys for watching. I hope you guys have all had a good week. From all of us here at Exchange Rates UK TV, please don't forget to like and subscribe.